Hey Scott, thank you. Jamie, how's it going, buddy?
Scott, Andy, good day to both of you. It is Thursday, and wow, the week was short because Monday was the holiday and all.
Oh, that's true. That's true. And it feels like the market's still trying to shake the long weekend cobwebs as well. But
Yeah.
yeah, hopefully we can get some sort of a break out in one direction or a break down, whatever you're cheering for. But we'll talk about that here in a minute when we get into market recap. Thanks everybody for tuning in today. We hope and plan on this being a great show for you. And so, but before we dive in, let's first take care of the disclaimer. Uh, Guys, we are educators here, and we're going to have some fun. We're going to show you some cool stuff, but nothing that you hear or see should be construed as investment advice. This is for educational purposes only. So you may get some ideas from me and Jamie, but once again, we are not licensed. If you're looking for professional advice, look for a registered broker, RIA, someone in that capacity. But let's talk about what we do have here at Trade Ideas. Besides an incredible software, is we have 5-star support, education, and training. I know a lot of people in here kicking the tires in here for the first time, and it is a very powerful software. Could be a little daunting at first, but you're going to find it's very intuitive, and boy, once you get the swing of it, it can help you in so many ways. So we realize that, and because it is very powerful, we have some of the best educators and trainers here. We're all professional traders. We have all been around the product for a very long time, know it like the back of our hands. We offer webinars throughout the week, Monday through Thursday, all in the 5 Eastern time slot. And then we also have a trading room, pretty much 7 hours a day, starts 30 minutes before the market opens, where you can watch and look at our software in real time and listen to Barry, our moderator in here, who is a long time, very successful trader, and a lot of other good traders in there. So it's a great place to hang out, guys. You do not have to have a subscription to be in there. And same goes with all of our webinars. And let's not forget the one we're going to have tomorrow at 11 a.m. Eastern Time. Mark this down, guys, because I know a lot of you are still getting familiar with the software. This is a great place to come and get even more familiar with it. And it's a format very much what you're looking at right now, but there's no agenda. It's just Q&A. You come in, ask questions that's been pondering you, and we will answer them for you. So don't forget about that Friday support session tomorrow. While there's still time you can sign up for the one-on-one training. This is going to go away in March when we start our group sessions. It's getting too big to handle the one-on-one anymore. But if you do subscribe up until March 5th, you will be able to sign up for the one-on-one training. So still available. Take advantage of it if you can. Brokerage Plus, it is. If you have the ability to write some really good strategies and you want to automate that, we have a product called Brokerage Plus that's connected to Interactive Brokers. It's a way for you to automate your trades and have our module pretty much fire off the trades for you and your exits. This is advanced only. If you want more information about that, go to trade-ideas.com/beta. All right, let's take a look at our agenda today. We're going to talk about this market recap and the spiders, how they're having trouble with the 20-period moving average. But then we're going to show you another picture of the Qs, and I'm sure you guys, are aware of the kind of difference in the charts there and the spiders and the Q. We're gonna dive into that, and Jamie and I will both have something to say about that for sure. Holly recap. It was a risk on again today. Risk off again. And I'm going to talk about, have you noticed lately how the risk on has taken sudden dives, toward the end of the day? So that could be a possible warning sign. We'll talk about that when we get to it. Weekend shakeout. This is an alert that I shared with you last week, and Bill was so nice to point out that I had $1 in the exit stop versus the 1% I intended to use. So I've made a few changes with this one, and I'm going to offer it to you again, share it with you, and still some pretty incredible shouldn't say incredible, but very good performance out of that as well, especially on the profit factor side. This is going to be fun. This yield watcher. Okay, it's a top list. I think I may have had this in a webinar, oh gosh, 6 months ago or something like this, but I've kind of fine-tuned it for some money managers, and we're going to kind of look at the game a lot of money managers play. This requires a custom formula, and we're going to build one, and I'm going to let you guys build it on your own accounts management page. Kind of walk through this together. I will share it with you, and we can all kind of build it together. It'll be fun because a lot of times you ask us to, give you some custom formulas, and we go to the back office and load them. But I'm going to show you how you can do it yourself. It's not that difficult. And then if we have time, we will do some chart requests. But first, I didn't mean to do that. Let me just back out and go into the market recap here. And what we're going to do, we'll talk about the spiders first, and then we'll take a look at the Qs. And here we go. Let me zoom in a little bit here. And if you see this area right here, we're kind of coming into, well, not coming, we've been here for a while, but now it's even getting more interested because you really have the 20 kind of diving down here, and it's real close to the 50. You can see there at the top of this chart up there where the 20 period is at 2072.70, and just right below that is the 50 period at 2072.40. So pretty much converging right here. And the last 4 days, the spiders have had trouble getting over the 20 period. Let's not, I don't know how much this means, but it could be important, because what happens is, let's look at the scenario again, and we kind of gone over this. You've had a huge run up in the market for several years, okay, and the rubber band was stretched and stretched and stretched, and then all of a sudden it popped back down, overextended to the downside to the tune of about, I don't know, 11 or 12%, and then whammy back up, excuse me, to the middle, pretty much middle part of the range. And I said to you guys last week, I said, don't be surprised. We could see some sideways action here as the market kind of makes up its mind, as the bulls and bears kind of play tug of war and go back and forth. Kind of what we're seeing here. I'm not going to say anybody's winning, even though we closed, probably closer to lows the last 3 days in the red bodied candles. But still, there's just not enough movement to say either direction here. It's a lot of sloppy chop is what it is. But the 20 has been kind of holding the spiders down there. So it's setting up for kind of what Steve alluded to last week and this week too. We talked about a bounce up into the pocket and maybe rolling back over, but it's too early to call that for sure. So I'm not going to go out on a limb and make any sort of prediction of what's happening here. But I will say, if the bulls may be getting a little bit frustrated, as we've rejected 4 times off this 20 period moving average. But let's take a look at the Qs. It's kind of a different story. All right, above all of its moving averages. It's having a hard time. You could say it, and this is not a real strong pivot level, but nonetheless, kind of a pivot level that it keeps trying to get through and coming back down. But look, above pretty much all its averages. You got the 10 turning back up now. Some could argue that it's flagging up here, not too far from highs. So, it's you can kind of picture a mountain climber, 2 mountain climbers. One is the Qs and the other is the spies. The Qs is kind of leading the way up the mountain. It's got the rope trying to pull the spiders up, and this, spiders are stuck in a crevice or something. But this is going to be interesting to me to see how this plays out, because the spiders have not taken the lead as the Qs have trying to pull them upward. So we'll have to see what happens. I'm not going to, try to guess. I will say this. I mean, to my argument, I think fundamentally things you have to keep you have to be on your toes is what I'm trying to say, because we've had a huge run up for 9 years now, and the fundamentals can be changing. What I mean by that is higher interest rates, and I'm sure you guys are aware of that, but inflation possibly picking up. So it's something that you gotta because it's no longer it's not going to be an easy money a narrative that's moving this market higher anymore. And historically, if you do get rising interest rates pretty fast, it's not good for equities. So we'll see what happens. But our job is not to prognosticate on macro events and fundamentals, but we are students of price action, okay, and we're reactive. So Jamie, do you have something to add? I'm sure you do, to the overall market here. I'm not going to go into the IWM or spiders.
The doctor would say to another doctor, Andy, I concur.
Okay.
I mean, I couldn't have said it better myself. We're right, kind of still stuck in the middle, on the top, and then the bottom on that wiki candle there that completes the pattern that we're looking at thus far. But only one thing is certain as we see these, the past 1, 2, 3, 4, 5 days, start to form this little pattern, consolidation, whatever you'd like to call it. It's kind of like an NR7 pattern, which is that micro consolidation on any time frame. And the only thing that's telling us is that, well, something's going to happen. Now, was it a up something or is it a down something? We don't know. But the market's taking a little breather here as we vacillate in this range, and we'll see what happens. Yeah.
David asked the question, would you be looking for the SMA 10 to cross the 20 to feel comfortable in the spies? Not really. That could, actually the price action could get pretty far ahead of it by the time the 10 actually can reach up to the 20. Very much kind of like you saw here. The price action had dropped pretty quickly before the 10 crossed the 20 to the downside, and that scenario could play out in the price action. I think a close, any close above the let's face it, the 20-period moving average, the bears will probably start getting nervous because you've had 4 rejections basically off the 20, and now if you get a close above it, and now you're going to have these moving averages turning higher. So if I was loaded up on the downside right now, short the market, I would not want to close basically above. I would want this action to continue to reject and then eventually steer the action lower. But we'll see what happens there. Sorry, reading some other stuff over here. Yes, Mike. Yeah, definitely. The VIX is not him. He mentions the VIX. Of course, the only thing we could pull up is this toxic ETF. But nonetheless, you can see this one is pretty much it's holding up. So there's not a lot of I should say there's still people doing some hedging. VIX is a barometer of put buying in the marketplace. So yeah. That's something I would definitely keep my eye on as well. All right, Jamie. Before I get to hand it over to Jamie, I do want to talk about this, guys, because we saw it today in the risk on the market. Let me pull back up the market. Okay, Holly was obviously. I don't know the number of trades. I'm going to guess right now it's probably close to 15. But
yeah, it's right on the money, 15.
Okay. Okay, so this is calculating all the positions being held until the end of the day. So typically when you have a pullback in the market, that's not just plummeting, this would be more of an orchestrated kind of downtrend, kind of the same pattern it took up. The last couple of days, the market has started selling off, and I've noticed an extreme acceleration in the risk on, which tells me, that people are on a hair trigger in the market right now, because because we did just have a recent, 11 or 12% correction in the market. We've bounced up, and now we're having a hard time moving higher. So I just thought yesterday the same thing happened. We had a nice risk on, and whoosh, it was gone like that. And if you look back, or just if you're tracking, any of this risk on price action in Holly, you will know that that's not customary. It's not what we've been seeing over the last several months. Not these just sudden evaporation of risk on profits just in a matter of minutes. So keep an eye on that, because that could be, we like to tell you, hey, listen, how you can kind of look at Holly as a barometer of the overall market. And this is one way you can do that, is you can see, wow, this risk on, which measures, the profits to the close, they're really losing their bid, when the market pulls back a little bit. And here's the market today. I mean, yeah, it pulled back some, but still well above yesterday's close, and yet the market, you can see the profits fell really drastically pretty quick. So individual stocks, maybe smaller cap, mid cap, were losing their bid, and people were backing away. So that's one gauge you can kind of keep an eye on. Yeah, David. Yeah, sounds like they're in day trader mode. Yeah, probably a lot of people in day trading mode right now.
Yeah, it's called don't get caught with your pants down mode.
Exactly. Yeah, exactly. All right, but there was some really great opportunity. I mean, the market is what it is, but that doesn't mean there wasn't some great opportunity. And Jamie's going to take over the show now and show you where some good pockets of opportunity were today in some individual stocks.
Sure, Andy. Let me flip it over here.
Okay.
Just let me know when you can see my desktop here.
Mm-hmm.
Okay, so welcome to my desktop, everybody. Of course, I've got Holly up here, and as far as what she put on, the show that she put on early in the day, it was about all you could hope for really today. And she came to the party with a pretty stacked deck here. 10 strategies, which isn't the highest, not the lowest, kind of right in the middle. When Holly does come with a bigger stack of strategies, that can stretch all the way up to, we've seen 14, 15 strategies make the cut before, and we've seen as little as, I think, 3 make the cut before. So this is kind of right in the middle of the road. And once again, with what we have going on here, Holly's had a little bit of time to filter additional data into the database with all these days after we had the little capitulation bounce, bounce on that big wiki candle there on the 9th. So a reasonable stack, and not too much running away with the show. Was one strategy wasn't just killing it with all the trades today. We had a pretty good disbursement. So let's do this. Not so much focus on the strategies, but let's just take a peek here at some of the trades that she kicked out, because there was a considerable amount of what we could call risk on money today, even though we're looking at this trade right here, VNO. Now, risk on is less than what we're seeing in risk off, 25 cents if you held to the close. But what I'd also like to point out as we go along this process is this max profit column, okay? And I think it's very important to point this out on a daily, or not a daily, but when we have these webinars, because this is a peek into the max that the stock was up during Holly's risk off mode. And once again, just to clarify here, risk off is simply Holly obeying her rule set. Profit targets, stop losses, timed holds, and then her other 2 options, which we can see here, is why she actually got out of the VNO trade, which was profit save. So this was one of the first ones out of the gate. I think the first one was at 654, yep, 658 here. So this was the second trade out of the gates from Sunrise Mover. Of course, Sunrise Mover, we knew right off the bat, one of the more profitable strategies that Holly brings to the party, came into the session at 64% statistical probability. So we've got that going for us right off the bat here. And of course, we can see here on the 5-minute candles, opening candles, and then Holly gets the buy signal right here. Now, of course, if we just kind of draw a line from that first high in the second 5-minute period, a little wicky, kind of hard to see there. And of course, I'm adjusting to the dark backgrounds here, and hopefully everybody can see these clearly. But just drew that line corresponding with a little wick right there. So Holly didn't get the signal here, a little bit afterwards, all right? And, you know, might look a little chasey on the chart, but I think the difference there is, what, 9 cents and 28. So about a 19-cent move from this little range break here that we see that was established since the open. And, of course, a little high up in the candle, but hey, that statistical probability, it doesn't really care about the candle. You know, it still holds its water regardless of the chart pattern. So we had nice statistical probability to get us in, and then we did just get push higher, you know, higher, higher, higher. Now, why did Holly get out of the trade on this one? Well, she did exercise her profit save functionality. And of course, the profit save, we can see here, she was only in the trade right at under 20 minutes here, because we could round this up to 6:59, and then she's exiting the trade at 7:18. And of course, you're going to notice that corresponds with the darker shaded area here being Holly's risk-off mode. Now, of course, we can see Holly gets out, takes a little dip down, not even quite back to the break-even level, and then it just slowly creeps higher and higher and higher. So the most that she could have exited for was 64 cents, but she took her 38 cents on the profit save. And just to kind of expound a little bit, you know, what is the profit save doing? What is reduced risk doing? And there's a time factor attached, kind of like a time decay factor. The longer Holly is in the trade and it is stalling out and not moving in the direction long or short, that little timer starts kicking down. It's more or less like a, well, it's just a different version of a trailing stop, using a couple of different factors like time in there as well. So on the trade count today, as Andy said earlier, 15 trades. And out of 15 trades being put on, mostly in the earlier part of the session, of course, we did see power hour long here, which only takes trades in the last hour. It did spit out two, had about, you know, mixed performance here, but most of these trades were generated in the first half of the day. And we can see out of these 15 trades, the max profit column, these guys right here never did work, and we can see Holly got out on reduced risk, saved a little bit of money there between 19 cents and 27 cents. This one took a little bit bigger of a loss, plugged out of reduced risk 22 cents. By the end of the day, you would have recouped a dime there. And of course, Andy, if you know, things seem to be back in parity today. Notice out of 15 trades, only one stop hit. And I think, I can't remember what day it was last week, Andy.
Oh yeah.
Or was it last Thursday, right?
It was last Thursday, and then next Friday, the next day, we had 3 stops in a row.
right. I think it was 4, right?
Was it?
And
Okay.
of course, you know, we chuckle about it because those things happen sometimes. But for the most part, on any given day with a trade blotter full of 15, 10, even 20 trades a lot of the time, we don't see a whole lot of stops hit. But of course, just as Andy said, last Thursday, you know, the blotter looked very similar to this. We're like, yeah, very rarely. And then the next day, it was bam, 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 bam. Of course, that's the anomaly and not the norm. Looks like we're kind of back on track here now. But the point here is that, okay, even on a day like today, which when we are in these ranges right here, we can get pulled around a lot as we vacillate from the top to the bottom. But even so, with everything that we saw today, think about it. If you put on 15 trades and had the opportunity to exit for a profit on 12 of them, those are pretty good numbers. You know, you're hard pressed to find an actual trader out there, you know, making those types of manual entries where the numbers are stacking up like that. So I always like to point that out. And, you know, this helps drive home what is the real value here and it is in the statistical probability that the system is generating. All right, I see some questions popping in out of the corner of my eye here. Holly, we're bad again today. Well, I don't know. Maybe if we're in the opposite universe, perhaps.
Here's what I want to say, because Jamie and I have both been on a trading floor, and when you look at the risk off, the max profit, and risk on, let's just pull one. Let's put AutoNation up, that AN. Let's pull up that one. Okay, if you're on a trading floor and you see this call, and it's, I mean, you know, some traders are going to take the 47 cents. Some traders may get the max profits of 54. Some may try to hold it on longer and get out for 31 cents. But I guarantee you, every one of those three traders are going to be telling the guy who called it out, nice call. It's just, you know, it is a nice call because there's very little risk in that. You know, there's, you know, it didn't get to, you know, near the stop. Yeah, there was a little bit of pain, but it was a nice support. Look at that support in the chart there on the daily. Yeah, some nice support there. And then it was a call and it got going, and it's up to you to manage the risk after that. And I see this all the time with Holly, where, and we're not, obviously, when we talk about max profit, we know not everybody's going to get max profit. I'm not going to get max profit. It's just, but the whole idea, I see time and time again that Holly will make a call with very, very little pain, meaning the trade does not go very much against her. Those are very good calls. I don't care how much you make to the upside, because it's all about risk management. And when you're able to, you know, make a call to where it goes against you very little, and you have the opportunity to make you know, much more than what you're risking to the downside, it's an extremely good call.
True. And you know, Andy, this LP&T is another good example, because of course we've got statistical probability. Yay, right? But what are we always driving home here? It's us, the men, the women, working with the machine. That's the way it was designed, right? And this is an interesting one, because LP&T, this was one of the power hour trades, right? But look, you know, Holly calls it here, and then what do we get? We get a little vacillation and then a push higher, right? Now, of course, Holly's not the most proficient at exiting. She's like, hey, this thing's not working, I'm out. She flats the trade. Now, if you and I, anybody else out there was in this trade, and we were trying to figure out, okay, I like the risk. I like this little consolidation area, plus it's coming from Holly, my high quality information source, you know, because that's what all of our windows are. And oh, by the way, power hour long did come into the session at 70%. Now, of course, you know, during leading up to that,
exactly,
that's what we had. So all up through here, Holly's performing just as well as she could, because getting up to almost 3 1/4 on this trade count is admirable. Now, of course, when we see the whole market pulling off, and we're in some or all of these trades, of course, what do we have to do? We have to exercise risk management. So just as Andy said, do you think anybody out there top ticked it? Probably not. No. Maybe there's one lucky person out there that did, but for the most part, you know, once you start to see the peel off and this start to come down, you're going to manage your risk. So by the time you got out, by the time your stops get hit, maybe you're up too. Maybe you're up $1.75. It's different for every person based on your risk parameters, right? But I wanted to circle back around. Let's see, this one was the one I had up, LP&T. So let's say we did take the trade here, and we're up here, and we're like, okay, this thing's working. What do? I pull up my daily, and I'm like, okay, this area right here, and you can see my cursor moving around here. I've already drawn the line, but also look what was happening. We're in the last hour of the day. The market's pulling back. This thing worked, and look, boom, it goes right up to this level here, where we can see simply by looking to the left. Well, I think I'll take that. I mean, the juice has pretty much been spent. The market's down, but this one went up. And of course, if you didn't take the cookies, wham, all the way back down. And that is just indicative of this market that we're in, right? This just happened on a much quicker timeline, hey,
Yep.
we're up, not for long, you got to take it. And this was, if you're in tune with what was happening already, then you were already kind of mentally prepared for that, right? Based on everything that had been happening thus far in the trading session.
Exactly. Very good observation.
David had a question real quick about Holly. Does she use a price minimum maximum? And I guess the quick answer, David, is that every strategy has different minimums and maximums. She does have some lower dollar strategies that will show up when the conditions are right and when they've scored high enough. Little Big Guy comes to mind, Andy. I know that's one that kicks out some lower dollar stocks, and there's one or two other ones in there. I just can't remember the name of them off the top of my head.
Yep. Yeah, I can't either. But the best thing to do is just kind of keep an eye on the strategies. You'll start to get to know them, and which ones will spit out the lower priced stocks, and which ones will spit out the higher priced stocks. And then you can always choose which strategies you want to follow. Jamie can show you the drop down box right there on the yep, where you can, if you want to just choose the ones you want to avoid the low price ones, you can eliminate the Mighty Mouses and the and I can't remember all of them, but just
Little Big Guy and Mighty Mouse. Mouse.
There you go.
Yeah.
Yep. Little Big Guy and Mighty Mouse. Yeah.
And John was asking on some of his charts, he sees a buy and a sell arrow, and I take it you're referring to like this guy right here on my daily for LW. I just double clicked off Holly's blotter, and of course this is one that she traded today, but we can see that back here on the November 16th, this same stock was triggered from Holly on that day, and of course it was a day play. But the reason we started folding these arrows in is because Holly is that high quality information source that's bringing us the play, and they're designed around intraday holds, but it also gives us more or less a candidate to take a peek at because we might like what's going on the daily, right? And as you liked the pattern that was emerging here, as this thing was marching higher, and you were like, this might be good for a swing trade, then you were rewarded as well. So that's one of the things that we get from new users all the time as well. Looks like TI is just for intraday stuff. What about swing trading? Well, that's what we're doing here, is we're incorporating all this buy and sell data in so that at the end of the day, and I would highly recommend this, not only are these plays good for the day, but they also give you a very high quality list to scan for at night, at the end of the session, whenever you do your long-term studies. These would all be great candidates to go back and look at for potential swing type setups.
Very good, Jamie.
Looks like the questions have kind of stalled out there. Let me just check the time here because I know you've got some new stuff to lay out to everybody, Andy. So I guess that's a perfect time to kick it back over to you if you're ready for that.
I'm ready. Sure. Absolutely.
Here you go.
All right. Thank you, Jamie. All right, guys. Yeah, last week I introduced a new window, an alert window called Weekend Shakeout. And what it was looking for was stocks that were up big the prior day. Let's take a look at the configuration real quick. We're not going to get too much into the all the filters because this has been optimized and back tested. But we are going to look at some of the basic ones, looking for prices from $3 to $50. Position in the previous day's range. Okay, I want it not to be through yesterday's highs. So in other words, the max is 99%. Volume, that's just a filter here. Let me click on hide unused. Position in range. Let's see here. Change from previous day. This is the kicker. Okay, the change from previous day, the day prior to yesterday, or yesterday's close had to be at least 4% higher than the prior day's close. That's what change from previous day means. Okay, doesn't have anything to do with the intraday action today. It's looking at the yesterday's close compared to the previous day's close. So I know now that the stock yesterday was up at least 4%. Okay, or more. It could be all the way up to a max of 60%. That's my max and that's my minimum. So it had to be up. The change in the 5 minute, I'm looking for maybe what's called a shakeout. So it opens up potentially and it drives down at least 2% in a 5 minute time period, trying to shake out the weak hands. It's not uncommon in this business with all the algos today. But great thing about trade ideas is you can, create these filters to exploit the algos. So let's take a look here once again. And last week I had my stop wrong. Okay, and let me show you what I'm talking about. I went to backtest and I went to risk management, and instead of a percentage check like I normally do, I had dollars, and I had a 1%, a $1. And if you're talking about stocks between $3 and $4 or $5, a dollar would be a pretty big stop. So I had to fix that. So what I did is I used 3%. You got to be careful using a percentage like 1% because you are catching a stock that's moving down fast in the 5 minute time period. You could get run over, and 1% can happen real quick. So you got to give yourself a little wiggle room. So I'm using 3% and I'm not using a profit target. I am testing this all the way back for 61 trading days. My timed exit is 90 minutes. Okay. Okay. Yeah, David, we'll do that in just a second here. So let's run this. Okay, it's a buy, right? So we're going to simulate a buy. And yeah, I'm pleased. I thought the strategy would work one way or another, and I made a few tweaks today, and lo and behold, the winning percentage is not all that great, but the winning margin is the win profits versus losses, and we'll take a look at that hopefully here in a second. David, probably if you can tomorrow, come to that our trading or support webinar tomorrow between 11 and 2 Eastern time. We usually take a segment in that where we go over the back tester. And if not, you just pop up in there and ask us and we'll do it. So that won't be a problem. That's probably the best thing. I don't think we have a video that's going to explain it better than what we do.
Yeah, Andy, I was just checking out our YouTube channel. And there's a ton of them in there, but a lot of them are like 8, 9 years old. So one of them is only 2 years old. So that one might be pretty good to watch. I'll find a link for it. I'll drop it in there. We'll see. Okay.
All right. Okay, so here's the back test now we're using the 3% stop. We have a profit factor of 2.04, which is pretty darn good. We have total trades of basically 300 trades. That's not bad. You're talking about, what's that, five trades a day. That's pretty good amount of when you're trading some of these alerts. The average winner is 44 cents. The average loser is 23 cents. So not a bad loser when you're looking at a 3%. So that's not bad at all. So, and interesting enough is the dip down and at the early going. So I went back and looked at the calendar. If you see something like that, what you can do sometimes, guys, is look in your calendar and see if there's maybe any anomalies. You can kind of go back and look at your calendar and see if maybe there were some crazy days where you just had a large number of losses. That's a pretty good one right there. 2 of 8, there's another one. So sometimes when I see that, you might want to just, for grins, maybe you'll do this. Maybe you want to go back and just test the last 30 days. And I haven't done this, so I have no idea what this is going to do. But let's see what it does if I test the last 30 days. Maybe the profit factor is not as high and the winning percentage is higher. No, that's actually even much better. Okay, but once again, I mean, you could say, Andy, you're just, making that fit the narrative here of a strong formula. But this is something I'll keep an eye on, because it was interesting that, even though, we were kind of in a bullish tape, back in that time of November, December, why this had such a bad performance in the first couple of weeks. So this is one I'll keep an eye on, over the next couple of 2 or 3 weeks, to see if it doesn't get better when tested on a 61-day period. There's a very good chance it might. So, all right, guys. So what I'm going to do is I'm going to share this one with you again. I'm going to put it into the chat window. Copy and share to cloud. Copy all, and I'm going to drop it in the chat window, and we'll call it Weekend Shakeout. And there you go. All right, and with the remaining time, guys, what I'm going to talk about here is one that I created a while back that calls for a custom formula, and it's a yield watcher. Now, before I get into that, wait, hold on just one second, guys. All right, so I created this for a couple of money managers, and let me explain to you guys, how money managers think, okay? In case we do have like a big sell-off, in the marketplace, they are looking for opportunity. And a lot of places where you can find opportunity is companies that have a dividend. All right, and because what they want to do for their clients, okay, if the markets do get turbulent and stocks start to sell off, a lot of them, pretty much everything sometimes can be taken to the woodshed, and that includes dividend-paying stocks. That if the price gets driven real low, their dividend yield will go way up. And if they can catch these dividend yields at a good 6%, 7%, I mean that's just huge for their clients, because most of these clients are long-term holders, and if they can grab a quality stock that pays a 5 or 6% dividend, while we're potentially in a bear market, they're fine with that. I mean, these are a lot of these are companies that's been around forever. They've been paying a dividend forever, so they can ride out the storm, and make a nice little yield on their stock. So I know a lot of you guys are, geeked up day traders, and this is like the last thing on your mind. You want to find dividend yields, but it's something that you will probably use down the road, or if you have something, a 401k that's just being put away somewhere, this is something, a strategy that you might want to apply. So what we got to do here, we have to create a custom formula. So what we're going to do here, and we're going to walk everybody through this. So what you want to do is go to your tradeIdeas.com, okay, and go down into the footer section, and you want to click on account management and go to your account page. Now you have to be logged in, okay? Once you're logged in, what you want to do is go to custom formulas, okay? And it's going to have any custom formulas that you may have built in this formula editor page, okay? So what we're going to do is I'm going to have everybody create a new, okay? So what you want to do is click on create new, and then you are going to put this formula. Your create new is going to look just like this, okay? Now what I'll do for you is drop this custom formula right here into the chat window, and you guys just copy and paste that into your source. Okay, that is the custom formula for dividend yield. All right, and then after that, I'm not going to copy and paste all these guys. You can just read it off. You just got to name it, basically give it a description so you'll know what it means when you see it in your custom formula. You want to call it dividend yield. The units, you want it to be percent. The format should be defaulted to 1.00. If not, put that in there. And then after you do that, just click on save, And once you do that, you should have your, it should be listed in your formula editor. And it should also be listed in your settings. So when you go into your configuration, Jamie, they're probably going to have to reset, right? Their connection.
I always make it happen. Once I pop a new formula in there, just do the reset connection thing.
Yeah. Okay. So after you do that, guys, just to make sure it's in there, hit reset connection, and that should do the trick. And then what you can do is if you right-click and go into configure and go into search and just scroll all the way down to the bottom, that's where your custom formulas are going to be. So you should have your dividend yield in there. And there's mine. Didn't appear as a link. No, it shouldn't be a link, David. You should copy, or if you're referring to what I dropped in the chat window, that's just something you have to copy and paste. It should allow you to copy that from the chat window. Yeah. So, okay, so now you have that dividend yield as a custom formula. You guys should all have that. So what I'm going to do now is copy this window, and I'm going to drop this in there and call it dividend yield. Okay, so that is the window. So now if you copy this, right, and load it to your cloud or load it from the cloud, you will get this dividend yield window, and you should have the custom formula in there where you're getting data in this field. Now let me explain to you, we had to tweak that custom formula a bit. And you have to keep an eye on this because most companies, I would say probably 95 or maybe more than that, 97% of them report a quarterly dividend yield. So I had to create the formula to compute the dividend yield on an annual basis. That's why you saw that times 400 at the end of that custom formula. Okay, so you have to take the quarterly dividend yield, multiply it times 4, you know, to get the dividend yield. So if you look at that formula, it is dividend divided by price times 400 instead of 100. That's what gives you the annual dividend yield versus the quarterly. Now, here's the problem. Some companies pay an annual dividend. There's nothing we can do about that, okay? And it's going to mess up your formula. So when you see CME in here, you see a 350, okay? That's going to be an annual dividend yield. It's going to throw off your, an annual dividend. It's going to throw off the dividend yield. So you just kind of have to keep your eye open for something like that. It's usually obvious. When you see stocks paying, 20, 30%, you know something's out of whack. So what I've done here in what the money managers wanted me to do, they wanted me to take the ETF DVY, okay? So we are going to take a look at it, and I'm gonna let you guys do this as well. You can do this on your own. Okay, so it's an iShares Select Dividend ETF, DVY, and what it is, it's their top holdings are companies that historically pay a dividend, and they've done this consistently over the years. Okay, you want to be careful for those companies that come out, and report it real quick. So they wanted to find stocks that were, you can look at some of these names, you're very familiar with them. They're stocks that have been historically, like I said, been paying a dividend. So you can go to this right here. You can just go to Morningstar. Here, I'll just drop the link in there for you. And you guys will just drop the link, and the way you can pull it up yourself. And I don't know if you could just have to list. You're gonna have to make a symbol list. Okay, I've already done that. So hopefully most of you know how to do a symbol list, because what I've done now is I've taken this yield watcher that's going to compute this annual dividend yield for me, and then I can point this to anything I want to. I can point this to any symbol list I want to. So I've opened up my configuration. I go to symbol list. You can see I've got this, pointed to DBY Holdings. This is what these money managers wanted. They wanted to be able to just look at this window at any time during the day and see, hey, wow, OKE here, man. This, Oklahoma utility natural gas distribution utility company that is pretty solid, been around for a very long time. That's not a bad yield right there, 5.39. Well, what happens if the market gets hit? What happens if oil and gas gets hit and the market gets hit and this thing drops down to, the $45 range? Well, you're going to see this yield go up to probably around 6.5 or 7. Now it's real tantalizing for them. So this is what a lot of money managers will do. They will look for opportunities of stocks that pay a good dividend to come down. AT&T, there's a good example. Verizon, they're always watching stocks like that to come down where they can snag them low. And then if you're lucky enough to get stock appreciation on top of the great dividend yield, that's even extra cream. But anyway, Jamie, let me know if I messed up anywhere or anybody's having a problem with that, and we can try to work through it in the closing minutes here. But you can point this to anything. Let's say you wanted to point this toward the S&P 500. We happen to have that in our pre-configured add existing list over here. So I've already got it in mind. So I'm going to take it off the DVY and let me point it to the S&P 500. Voila, there I got stocks. And this is what I'm talking about. This is where you have to be careful of VAR paying a $10 dividend. Okay, that was a one-time dividend, I guarantee you, and so it's going to be way skewed. So anytime you see something like that, guys, just ignore it. You want to look for the ones that are, paying anything around 5, 6, 7, 8. This can be very, very tempting, but be careful. You don't want to just base it all only off dividend yields. You want to get solid companies when you're playing this game, okay? Because a lot of companies, if they're paying a huge dividend, like a lot of these partnerships in the oil and gas, you got to be careful with them, because you may get that dividend, but you may turn around and the stock's trading for $1.50, 3 or 4 months down the road. So you got to be careful what you're doing when it comes to that. But
Andy, I think we're all caught up on questions. I'll just tell Jowie, send that request over to info@trade-ideas.com. We'll give it the once over and get back to you and let you know if it's doable.
Okay, yeah, very good. All right, guys. Well, I hope it looks like everybody got that. Didn't have any problems with it. It's a different game, obviously, but it can be very, very fruitful when it comes to your investing. So, maybe something that can help those who are more longer-term holders out there. I know we have them. I talk to them all the time. So with that said, guys, I think I'm going to bring Scott in. You hang on. He's going to offer you a discount. So, Scott, if you want to bring it back in.
We have a discount code. We'll get to that in a moment. Just a couple of things on the way there, though. There's a nice ebook that Andy and Jamie participated in creating, and also Sean McLaughlin and Steve Gomez also contributed. It is 5 ways to win in a post-BTFD market. So when the bears come out and buying the dip no longer works, what are you going to do? Well, download the book at trade-ideas.com/ebook. Just pop your email in there and get that download. Check it out. We also have a podcast that comes out on Fridays. So Jamie and Dan are on the slate for tomorrow's podcast. You'll hear their golden tones of their voices tomorrow afternoon after the close sometime. So make sure you're subscribed already. Just search for Trade Ideas Podcast in whatever app you use to listen to podcasts. And you can download last week and the week before's episodes. We had Michael Noss on last week. He just joined the Trade Ideas team, and he is an expert in algorithmic and automated trading using the Trade Ideas platform. So you should check out that podcast. Really interesting, last week's, and I'm sure this week's will be worth your while too. We have a code that's good this month. Use it before the end of February. I Heart Holly, all caps. That's an I at the beginning, not an L. Capital I, Heart Holly, 15% off your first month or year of Trade Ideas, and you can get into Trade Ideas Premium for less than you spent on lunch. So what are you waiting for? Email us info@trade-ideas.com. if you have any questions, or you can follow Jamie on Twitter at QuantBot. Steve Gomez is at Today Trader. We also got Trade Ideas and some other ones. Facebook.com/TradeIdeasPro is the place to like us on Facebook so that you can share all the nice things we post with your friends. Thanks, guys. We'll have a recording of this up later on tonight, or at least by tomorrow morning. You get a reminder about where to find it. Thank you, Andy and Jamie.
All right. Thank you, Scott. Thanks, everybody. Thanks for your kind words. See you tomorrow.
Yeah, have a good
Hey,
one. Later, guys.